Welcome back, fellow chipstock investors. Let's take a few minutes today and talk about self-driving vehicles, or maybe more specifically where we're at right now, advanced driver assist systems, or ADAS. That's probably more the speed of where we're going right at the moment. But first, some background. Many of you may know we have been in Tirana, Albania for the last few weeks, and some of the other Balkan countries around it. It's been absolutely stunning to see how mobile technology has dramatically altered the local economy as fast developing places like Albania leapfrog what we traditionally might consider to be infrastructure to emphasize things like quality internet access and mobile networks. The mark this technology infrastructure has left on the city is really stunning. So as you might expect, smartphones are completely ubiquitous. Everybody has one. Downtown areas like Tirana have lots of remote digital workers. The streets have countless dozens of smartphone shops. In fact, some blocks in the shopping areas, they're completely lined with mobile phone and mobile accessory stores. But I believe the next decade of mobile technology development, jumping off the sidewalks and into the streets to power our vehicles, will be a much different, perhaps slower process, not just in places like Albania and other fast developing economies, but also in highly industrialized ones like the US and Western Europe. Slow consumer adoption, as well as regulatory bodies throttling the rollout of self-driving car technology, I think will cause the industry to take a different path than what we saw over the last 20 years since smartphones were introduced. Nevertheless, I do think this will be a profitable journey that will eventually completely transform the world that we live in, how we drive, how we travel, and the like. That's where Mobileye comes in, which was just re-IPO'd by Intel here at the end of October. A little background first. Intel acquired Mobileye back in 2017 for $14.7 billion. Mobileye was a public company before that, but over the last 5 years has been completely under the control of Intel. But at the end of October 2022, Intel did a partial spinoff of Mobileye. They sold basically a 5% stake in the company. That raised nearly $900 million in net cash for Mobileye. The IPO was at about $21 per share, but by the time it hit the public markets for trade, the stock jumped much higher than that. As I record this right now, Mobileye stock is over $26 a share. So this thing, as usual with many IPOs, is hitting the market at the peak of the hype cycle. What is Mobileye exactly? Mobileye has developed this system on chip, or SoC, that it calls IQ, or the brain behind a self-driving car system. They also have some software built on top of that IQ SoC. Mobileye's been around for a couple of decades, and they have seen some incredible growth, even while under the purview of Intel. We can see the incredible growth they've experienced just in the last few years while under Intel. In 2019, they reported 50 million IQ systems shipped. As of the end of 2021, more than 100 million IQ systems shipped to over 700 vehicle models, over 38 automakers. Mobileye is doing a lot of work to help advance the industry from, again, that standard where we're at currently, advanced driver assist systems, ADAS, things like lane assist, adaptive cruise control, and getting us closer and closer to full self-driving vehicles. There are tens of millions of vehicles sold every year around the world. So obviously this is a potentially massive market. The auto industry is huge. Semiconductor companies have all piled in trying to develop their own self-driving car technology or just advances in chip technology on the way to full autonomy. Which brings me to reason number one why I think you might want to tap the brakes before buying the stock. Mobileye has tons of competition. Here's just a couple screenshots of what they've listed in their prospectus. So specifically, they name actual automakers like Tesla, Mercedes-Benz, GM, Volvo. Over on the other side of the Pacific, in China, NIO and XPeng, all of these companies are working to some degree on their own autonomous vehicle technology. Mobileye also talks about other tier one auto suppliers, so companies like Bosch, Continental, and Denso listed as competitors. And then, of course, there's other chip designers, Umbrella, AMD, Qualcomm, which acquired a software company called Arriver earlier this year, Black Sesame Technologies, which is privately held business at this point, Horizon Robotics, Huawei, NVIDIA, NXP, Renesas Electronics, Texas Instruments. You name it, if there's a semiconductor business out there that you're interested in, there's a decent chance that they're working on something involved with automotive technology and self-driving cars. Mobileye also cites companies known as Automated Mobility as a Service, or AMAAS. Most of these companies are private at this point, but they include Argo AI, Aurora, Cruise, which is owned by GM, Waymo, Yandex, Zoox, AutoX, Baidu, DeepRoute AI, Didi Chuxing, Momenta, WeRide, some of the ones over in China. Mobileye also owns an app called Move It. Again, think of this as like Google Maps, but this thing competes with ride-hailing services like Uber and Lyft and Grab, as well as numerous regional startups that are popping up like weeds all over the world. One other really interesting note here, under Mobileye's list of competitors, it lists consumer autonomous vehicle competitors like Sony, Tesla, who are developing self-driving vehicles, and Apple. Mobileye specifically lists Apple in their prospectus as a potential competitor developing autonomous vehicles. More proof that Apple is working on self-driving car technology, maybe a car, an actual Apple car. We'll talk about that more as details emerge, but interesting to note that, and perhaps Apple is working on this technology without the help of Mobileye, just like Tesla has been with its autonomous vehicle technology. Another risk that Mobileye doesn't specifically call out in its prospectus, but I think is worth bearing in mind, is Mobileye is just one side of the self-driving car formula. So Mobileye sells that system on chip, that SoC, that is the hardware for the vehicle itself. But the cloud, or more specifically data centers that support cloud computing, are also needed in advancing self-driving car technology. That's where you would think Intel would come in, the controlling shareholder of Mobileye. But Intel is really, really far behind in data center technology. They have themselves admitted they're probably going to continue losing market share on the data center front to companies like NVIDIA and AMD for at least a couple of years. So Mobileye, I really see as kind of an incomplete self-driving car business. It really just addresses the vehicle itself, and it's going to rely on competitors for the complete package. Two of those competitors, NVIDIA and AMD, are working on both sides of the equation, both the components themselves for the car and the data centers in which the self-driving car software is going to be trained and built. Back to Mobileye's prospectus here, specifically they talk about concentration of revenue. So they have 3 tier 1 auto suppliers that accounted for 3/4 of their revenue so far in 2022. ZF, Valeo, and Aptiv, collectively 43%, 15% and 15% respectively of Mobileye's revenue, just 3 customers. That's a potential risk if one of these customers decides to switch to a different semiconductor supplier. As we've discussed here in other videos, for example, check out the What Caused the Chip Shortage video that we recorded a couple of weeks ago. Supply chains are complicated, and Mobileye is no exception. So its IQ system on chip hardware is actually manufactured by ST Microelectronics, ticker symbol STM, but ST Micro actually subcontracts some of that work to Taiwan Semiconductor. So this is a complicated supply chain that spans multiple continents. There are supply chain issues with getting parts back and forth to the different fabs and different manufacturers for Mobileye's IQ system on chips. There's also inflation that's causing Mobileye to reassess its pricing on its SoCs to its customers. Basically, more complexity, I think, can equal to weaker product power over the long term. One last big risk that I see with this stock is Intel is still far and away the majority shareholder. They still own 95% of Mobileye. They are actually who's in control here. Intel is not betting on self-driving cars as its future. Intel is betting on and doubling down on chip manufacturing. Chip manufacturing is incredibly expensive. It takes many years to build a new fab or adapt an existing one for a new purpose. If Mobileye keeps growing, Intel is likely to sell more stock to raise cash to help fund its operations and its goals for the future. That kind of selling pressure can also keep a lid on Mobileye gaining any sustained upward momentum. Okay, let's talk about some of Mobileye's financials here, because up till this point, I've really just been dogging on this company, but there is some good stuff happening here. They did say that revenue in the third quarter of 2022 was $450 million compared to $326 million the same period last year, a 30% increase. 2022 year-to-date revenue is now up 26% year over year, so that 38% in Q3 is an acceleration in growth. Clearly, as some supply chain issues get fixed, Mobileye is getting more supply and able to pass that on to its automotive partners. That's a good sign to see that revenue accelerate in growth. If we extrapolate out this growth for full year 2022, Mobileye stock trades for a bit over 10 times 2022 sales at this point. A couple things to bear in mind, though, here. Mobileye on an adjusted basis, which basically just backs out the amortization of intangible assets, which is a non-cash expense. Mobileye is slightly profitable so far in 2022. They did turn an adjusted operating profit of $139 million in Q3. The company is operating at a slight unadjusted operating loss. Again, that's all because of the amortization of intangible assets. Not a huge deal here. Clearly, the company is getting to profitability very quickly. But another concern here, if we step away from actual operating profit margins, let's look at the balance sheet. Mobileye said that Intel is going to ensure that they have at least $1 billion in total cash on the books from the spinoff. Most of that's going to come from the re-IPO that just happened. However, Intel also gifted Mobileye with a $3.5 billion dividend note. In other words, debt. That's also going to be a drag on profitability. Mobileye said it will use some of the proceeds from its IPO to repay that note to Intel. But clearly, Intel has a lot more to gain from this IPO of Mobileye than I think shareholders do at this point, thanks to that $3.5 billion dividend note that they're no doubt going to use to help bolster their own manufacturing goals in the next couple of years. I want to talk a little bit here about fair value of the stock. And what I did was I kind of reverse engineered how the IPO price arrived at $21 per share. So I've assumed Mobileye is going to have, let's say, adjusted earnings per share of 10 cents by the time 2022 is all said and done. Maybe that's a bit optimistic, but it looks like the company is reaching profitability. I'm going to give them the benefit of the doubt and say 10 cents per share for 2022. Assuming that small base of earnings, I'm going to say the company grows its earnings per share at 50%, at a 50% rate in both 2023 and 2024, before slowing to a low teens percentage earnings per share growth rate after that. That gets us to about the $20 to $21 per share IPO price. Obviously, there was a lot of investor optimism when this thing hit the public market. It went from $21 to $26 very quickly. But I think a fair value, assuming some pretty strong growth numbers in the next couple of years, is 20 to 21 bucks. I would like to see a margin of safety here. I wouldn't be at all surprised to see Mobileye in the coming months slip all the way back to its IPO price, maybe a bit below that. At that point, I might be a bit more interested. Whenever there's an IPO, I like to wait 6 to 12 months and just kind of be in wait and see mode. This is why. I think Mobileye stock at this point is still benefiting from peak hype from the Intel IPO. I think it would be prudent to hold off before nibbling on the stock at this point. That being said, a lot of work has gone into mobile technology in the last couple of decades to get us to where we are today with smartphones. A lot of the same technology can now be applied into the automotive industry to help advance more driver assist features and eventually self-driving cars. Mobileye is definitely a company to keep an eye on here, although I think at this point there are other stocks out there that are a better bet. We'll talk more about those soon. Third quarter earnings season is in full swing right now, and some of those companies are going to be reporting here very soon. So we have more videos coming to you from Chip Stock Investor. Make sure you hit subscribe, hit the bell so you don't miss a video. If you found this information helpful in your assessment of Mobileye stock, consider sharing it with your social media network. We appreciate the support. See you all next time.